Hi guys, Thomas from FINEIGHT here, and welcome to Tuesday's recap. And I did two short trades, which were in some ways similar with each other, but one of them was straight out of the open, and one of them was close to the ending of the session. So let's compare them and see how I managed. Okay, so the first one was in TGT, Target Corporation. I had it on my watch list to go possibly long because it was a strong market throughout April, May. However, there was also the possibility to go short because of the extension of this move. So, seeing as Target opened, did a huge initial range and then started falling straight down, I took the short bias for this stock for the remainder of the day. So, this was the situation that I got in. So I saw the consolidation, the pull to the moving average and the flip zone here. Sorry. So this was the flip zone and the pullback to the moving average. And my entry was right there because the lows of the day were too low for me to take action. And I was thinking, okay, so the reasonable expectation to have is somewhere in the 122, 122.50 area. So I needed a sooner entry. So I entered at the break of 124 with couple cents of slippage, of course. It went about 30 cents into my favor and then returned to the consolidation again. Then it did this, and it was looking good up until right there where it started to behave like it's gonna break upwards. So technically you cannot see it here, but at the time S&P started rising again. And if you took just this area, cut it and pasted it, let's say over there, what does it look like? It looks like a bull flag. So, and also the price action and the level 2s and everything, it made me exit the trade at the break of 124.20. So I decided to, at that point, lower my stop loss. I didn't even get 1-to-1. So in the end, I got out right there, 124.19, and then look what happened. So this was a really nice call, and instead of losing full percent, I only lost 1/3%. So let's now compare the situation with the MRNA, where I took the second trade. So again, a really extended move price gapping down, so from the beginning I knew that I would be interested in shorting. So at this point where it formed a really nice base for a breakdown at the 73.80 mark, I decided to push the button and go short. But now comes the difference. The stock breaks for a couple of cents and again starts consolidating. Now, if we take a look at the SPY at that time, we can see that it broke the highs of the day and was looking strong. So I played it on the cautious side and I exited at 74.01. Now, bear in mind that my previous trade did exactly this. It tried to break, did not, it failed, and then rocketed to the upside. So I was thinking, okay, so I can exit with just a slight loss, so let's do it. But then it finally broke with the market and it went as low as 70.3, so over 3 points from my original entry. So yeah, again, as I was saying yesterday, that playing it safe is a double-edged sword. So here we have it. So instead of 2 possible losses, I only lost 0.57, which is great for 2 losses. But again, the second trade could have been a really nice winner. So the differences there are that if you compare the two, the target has been trading in an area that it previously traded in. So again, if we take a look at target with a 1-day chart, we can see that this area has been traded before in January, and this 125, 126, it was a flip area, so a resistance, and for some reason market had the need to retest it before finally collapsing. Now let's compare that to the daily chart of MRNA, and we see nothing because MRNA never traded at those prices. So this is a minuscule detail, but it can really help us deciding slight biases. Also, the target was not gapping significantly down. It was opening right around previous day's close, whereas the MRNA showed us straight from the beginning that it just wants to go down. So those are the details that need to be taken into consideration. So yeah, I feel like it's a mistake for my part. Of course, being live in the trade, you take things slightly differently, and in my defense, SPY breaking the daily highs is usually a really strong impulse for all of the stocks. So I'm not beating myself really, but you know, seeing this usually doesn't really bring you much joy after you've just exited. So that's trading, guys. Let's the best we can hope for is to learn from the past and continue improving in the future. So thanks for watching, and hope you guys had a better day, more profitable day, and see you tomorrow.